Hey everyone, welcome back to the Daily Gold Podcast. Today we're speaking with Darren Wagner. He's the founder and CEO of Balmoral Resources. Darren, how are you today?
I'm pretty good. Just coming off of losing my voice at PDAC, but otherwise we're pretty good.
Well, it sounds like you have enough of a voice right now, and that's why I wanted to catch up with you and get your comments on a couple of these latest news releases. The first one, I'll just go over the bullet points and the headline for our listeners out there so they don't have to pull it up. At the end of January, you reported more high-grade intercepts from your Martiniere property. A couple of the highlights, you got 11.74 grams per ton gold over about 8.9 meters. Also, more than 7.5 grams per ton over nearly 8 meters. And so, Darren, just tell us, I mean, you guys have been producing numerous high-grade results. I mean, with your news releases and with your drilling, I should say. What is the significance and the importance of this news that came out at the end of January?
Right. Yeah. So on that Martiniere project, we have two gold-bearing trends that intersect each other. That's a fairly unique thing. It typically produces high-grade deposits like the ones that we're in the process of drilling off. The news in January was on one of those two trends. It's the one we call Bug Lake, sort of a north-south trending system. And it was a set of drill holes designed to expand three particular gold-bearing zones within that broader Bug Lake, what we call the Bug Lake Fault Corridor. And all of the holes were successful in intersecting their targets. And basically, they all returned, very good high-grade results. And those, like I said, the highlight ones are obviously fairly exceptional. And all they're doing is providing further confirmation of the scale and the continuity of these high-grade zones that we're working on, and the fact that there are so many of them clustered into a relatively small space, and that they all remain open. And they all continue to do these kind of grades is obviously very good news for the company and the shareholders. And it's a story then that, as the drilling we're doing at the moment, will just continue to enhance and build this out and grow the size and the scale of these discoveries. And so obviously you're very excited when you're consistently able to return grade in this business, and that's exactly what Martiniere's been doing.
Okay, now let's get to the more recent news, which was posted on March 4th. You have some bullet points here. You extended your high-grade system by over 500 meters, and also you point out the system is open in all directions for further expansion. Darren, can you go over this news? And also, I mean, how do we know, I guess if you could put it in layman's terms, I mean, what has happened with the drilling that makes us know that the system has been extended by 500 meters?
Yeah, so I mean the goal for in the early part of January we launched the winter program, and then the winter program is going to consist of about 60 odd drill holes and about 12 to 14,000 meters of drilling. And the objective of the drill program was to try and push the scale of the overall system, not necessarily to fill in the existing zones, but to push the overall system to try and find out, because we've never been able to find an edge on this system to this point, to push it out as far as we could. And somewhat that's what the major companies in the gold space want to see. I mean, they like good high-grade deposits, but they want to see that it has scale and scope to it. And that really was our objective with the winter program. So, the first part of that was these 4 holes that we reported out in the release you just talked about. And these are basically very broad styles. In a system like this, typically, if in the early part of the exploration, you step out maybe 25 meters at a time, trying to figure out where the system is going, how it grades, what the grade distribution looks like. We've got a pretty good handle on that now, so we decided to be a whole lot braver and step out basically 150 meters at a time and just try and push the limits on this thing. And the really great news for the company is that we didn't find a limit to it. We stepped out to those holes were done down to the southwest in this on the Martiniere trend, the other one. talked about the Bug Lake earlier. Martiniere is the other trend. And all 4 of the holes intersected high-grade gold mineralization, and the one furthest away actually intersected 2 zones of high-grade mineralization. And so really what we did was we more than doubled the size of that high-grade structure, or the known length of that high-grade structure. Now, obviously, we've got to come back in and infill that to define how many ounces are sitting there. But the fact that we were able to go in and still come out, step that far out, more than double what more than double of anything we've done to date, to go in there and more than double it and still have it wide open is actually pretty stunning news. And unfortunately, we released it on what was one of the worst days of the last several months in the marketplace. But it's actually quite stunning. From a technical perspective, that is not an easy thing to do. And we did not honestly expect to go 4 for 4 out there. We'd have been happy with, say 2 out of 4 and just some indication it was still there. But the fact that they all hit, and they all hit, economic grade thickness along that trend is outstanding. And it really opens up that end of it. And we're doing the same thing on the other end of that trend. And then on the Bug Lake trend, we're pushing out right now, trying to push it out and double the strike length on it. So, it probably wasn't a coincidence that the first call I got the morning that release came out was from a major gold company asking to come up and have a look at the property. So it's the message got through there at least. So it's tremendous success for us. It really opens it up. It gives us another 500 meters to be able to add ounces on, and the system still remains open. So we still don't have any edges.
Darren, I have a couple of follow-up questions on that. I'm just trying to figure out how I'd frame it into specifics, because there's so many directions I can go with that. I guess I should ask, now, why don't you talk about your plans for the rest of this year, how much drilling you're going to be doing, your capital costs for that. And so, in regards to the drilling, are you going to continue to focus more on doing the step-out drilling and kind of seeing, how far this mineralization extends? Because, as you said, that's what majors want to see. Or are you going to do a little bit of infill drilling? What exactly, are your plans for later this year?
Yeah, well, we're very well capitalized, so we'll try and actually achieve a bit of a balance there. I think if with the winter program, the design of it, the one that we're doing now, the design of it was to push the boundaries. Let's just see how big how big this thing really is. And so far, we don't have an answer to that. So it makes some sense to continue to push those boundaries. Because I guess the other part that plays into that, if it's that big, we may not necessarily be doing, be even in the best part of it yet. So, there's 12 to 14,000 meters to be done this winter. That will probably be more or less completed by the end of March or early April. We'll take about 6 weeks off, let things dry out a little bit. That's what we typically call breakup up there. And then we'll go back in the summer, and the summer program is designed right now to be about 25,000 meters, so it'll be about a total of 40 for the year. And it will be, the initial design of it was for it to be mainly an infill program headed for resource in Q4, for a maiden resource off of Martiniere in Q4. With the extent of the boundaries of the system we've been able to push, I think we will continue to do a little bit of pushing, but we will do a fair bit of infill, and at least from the more advanced parts of the system, aim to have that initial resource out to you in Q4 of this year. So, it's never a bad idea, never a bad thing when you bring your initial resource and you can still say the system remains open in all directions. So there'll be a fair number of infill or near, close-in expansion holes to the individual zones done in that summer program, so that you're printing, a nice healthy number in the fall. But yeah, if the system wants to keep, if it wants to keep expanding and growing, there's no point, slowing down the push on it. So we'll try and achieve a bit of both this summer. So right now we're sitting out the back of this this winter program, we'll be sitting with somewhere between 12 and 14 million in the treasury. Probably close around about 13, I think, by the time the winter program's done. And so we're fully funded for that summer program plus. Summer program probably cost us somewhere on the order of $5 to $6 million. So that continues to be very strong. And don't forget, because we're working in the province of Quebec, for the dollars we spend on the ground, we actually get about 35 cents back for every dollar we spend. So, that pushes that, cash on hand a little further out. So we're in great shape there. We continue to be aggressive with the drills. We continue to push the bounds on this system, continue to intersect high grades. So it's be an exciting few months, and we should get into fairly steady news flow off the winter program here in the next couple of weeks, and that will more or less continue right the way through the year.
Darren, I want to get your thoughts on the industry a little bit, just because you have a lot of experience, a lot of success in this industry, and you speak with major companies quite frequently. It's been well publicized, the failures of major companies during this cycle, despite record gold prices. So going forward, what are major companies really looking for? And I know you'd probably have to speak partly from your case, but is it grade that really excites them, or is it maybe the potential for a deposit with good grade to really grow substantially? Is it all those things together? What are your thoughts on what they're looking for at this point in the cycle?
Yeah, I think what you've heard from the majors, and it started probably at the Denver Gold Show last fall with the closing comments, and you've heard it consistently from them, and that's the feedback we're getting from the bankers who deal with them as well, is that the desire is for better quality deposits, i.e., ones they can mine at a bigger profit margin, because that's where the failing has been on their part. And you don't have to look very much further than that grade equation you talked about, because most of these companies that are the majors were founded on mining. Their original discoveries were high-grade deposits that they mine. And now you look at the average grade of what the majors are mining, and it's right down there in that 1 gram range versus high-grade deposit at 6 to 8. Dan McGinnis, who runs Meg Silver, who's an advisor and a close friend, has his favorite saying, and it's that not all ounces are created equally, and that's directly related to grade. Would you rather have, a 10 gram ounce, a 10 gram ounce or a 1 gram ounce? And so I think that's where the industry is evolving to. I think we've seen the majors mine lots of ounces but not make a lot of money, and that's reflected in their share price performance. And I think you've seen almost the head of almost every major company lose his job for that. And the call has gone out really for better quality deposits. They still need deposits. The majors still need deposits to scale. They still need things that are relatively large. But my sense from talking to guys, and certainly the feedback that they've been providing to the street, is we are looking for better quality, i.e., better grade deposits, and if they happen to be in a friendly place, so much the better. So I think that's what, the evolution that's gone on. We've gone from ounces are us, which is kind of, where we've been for a number of years, bigger, more production, produce more ounces, yada, 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 to, hey, let's actually start making some money on the ounces we're mining. And the only way to do that is to mine better quality ounces, and quality in this game is directly related to grade.
Now, in terms of exploration, Darren, is it so much money has been spent during the cycle, and it seems like just there hasn't been very much high grade that's been found, or at least not in the right jurisdictions. Of course, all the producers out there that want to grow, they want to find these high margin deposits that produce at $500 or $600 cash costs. In your opinion, are there many of these deposits out there? Obviously, I know it's very likely what you have could become one, but it just seems like it's very difficult to find these types of deposits that can produce at those types of cash costs. I mean, what
Yeah.
has to? I mean, do we need better exploration techniques? What has to happen to find these deposits if more are available? Or, I mean, are we inevitably going to reach a point where, say, the gold price goes higher and then it supports, the expectations of some? They have to drop what they want to see in cash costs.
Well, I don't think they're capable of dropping their cash costs much, because I think if you actually look at Barrick and Goldcorp coming clean, on total costs, they're in the $1,200 range. So they really don't have a lot of. The margins in this business haven't changed. I think what's changed or is changing is that the low-hanging fruit, the things that were easy to find, the near-surface high-grade deposits, the things that were literally sticking out of the ground. The explorers over time get to be pretty good, and so those things, by and large, have been found. And the bigger, the discoveries of significance, especially on the high-grade side, are coming out of places where it's a little more difficult to work, and you can, whether that's politically or whether it's just, technically. And for our example, the deposit that or the zones that we're busy drilling off, they're totally blind. They're completely covered by overburden. You can't walk up. You got brand new hammers on site that have never been used because there's no rock around. So you're having to go to areas where things are a little more difficult to find, therefore typically a little more costly to find because it takes you longer to find them. Or you're going to areas of significant political risk, and we've seen that implode on any number of companies. So I think, in answer to your question, I think they're still out there. I just think they're harder to find, so the discovery rates will be lower and lower, just in terms of, every year X number are found. I think the discovery rates will be lower, the discovery costs will be higher, and the net effect of all of that is that the production rates over time, if you're going to do it at a profit, likely drive the gold price over time higher up, because it's just it's not easy anymore to go out and find a 3 to 5 million ounce deposit with grade in it, and we see that. I mean, the discovery rates in the business. There's been, like you said earlier, there's been a ton of money spent without much in the way of significant discoveries made. So yeah, I think you're dead on. I think that in the longer term, that ends up driving the price, because the margins in this business are not great, even with the stuff that they're mining now. They can't afford to go to lower grade things unless that price goes higher, and even then it's still a margin game, it's still a profit game.
Darren, before we close, how about some final thoughts on Balmoral Resources and where you guys fit in amid some of these difficulties and issues in the industry?
Well, I think the advantage. I think there's a number of advantages that we have. Obviously, cash in the treasury is number one, and the ability to attract financing is right at or with that, and that comes with track record. The other clear advantages for us are the grade of what we're finding is the kind of stuff that would be attractive to anybody that's in the mining game, whether it's acquisitions or building a mine, and the location. I mean, we're in a great place. We've got the biggest gold mine in Canada just opened on our doorstep, and that'll provide us with a bright, shining light, little over there in the distance, to drive a lot of attention to the area. And so our job is just to sit down and take the capital we've got, grow these discoveries out, and drive them forward over the next few months, and hopefully get a nice pleasant reward for the shareholders as the process moves forward.
Okay, Darren. Well, thanks so much for your time today. We really appreciate it, and I look forward to speaking with you again soon in the future.
Always a pleasure, and thanks for the opportunity.